Hi, my name is Richard Hutton and welcome to the Exponential Fund, the place where you learn to invest and absolutely crush average market returns. Today is a quick market update. It is 19th of March, so let's get right into it. The portfolio performance for last week was up 15%. That's nice. Now, speaking of which, I should have looked up the S&P 500's performance. So let me do that right now. It was up 5.6% in the last week. So we outperformed quite nicely. For the month, I am up only 1.8% because there was a big drop before. And for this year, I am still down 15.05%. So we have some catching up to do, but it is possible that the bottom is behind us. Anyway, I did a little analysis out of curiosity. So the 20 stocks in my portfolio, in my flagship, the Exponential Fund strategy, are down from their all-time high 34%. Quite a bit. I mean, that's like legit crash. That means for the stocks to just get back up to where they were, they have to go up 66%. Nice. So, obviously, the question is, in what time frame? I have no idea. It is possible this year, so like a few months, yeah. But we'll see. Now, I also calculated the percent drop in the price to sales multiple, right? That's different. Because if the stock price crashes for a while, but the business keeps growing, then the multiple should crash more than the stock itself. Make sense? So, and it was true. Not by a huge amount, but So the average price to sales drop is 42% compared to just 34% in the stock price, right? So the actual value of the business dropped by 42%, even though the price dropped only 34%. It's a very good deal. Like, you will probably look back in a year or two and say, wow, what amazing discounts were in March of 2022. That's my opinion. Obviously, anything can happen. This is not financial advice. They could crash another 50%, I mean, if nuclear war breaks out, sure, all this is out the window. But hey, I started tweeting this week. Well, I thought if I'm doing these rebalancings of the portfolio, might as well give more often updates. So if you're new here, here's a quick recap of my strategy. So I call it the Exponential Fund, and imagine it's like the S&P 500 index, but you take out all the stocks that are declining, stagnating, or growing slowly. So you're left with big companies that grow fast. Right. That is essentially it. The Exponential Fund is, I buy an equal amount of the 20 largest companies that have been growing their sales by at least 10% every year for the last 5 years. I am very unforgiving. If a stock had one bad year, out of here. So, some stocks suffered in the recession. Some stocks benefited. Great. I want stocks which are recession proof. And of course, initially, each position has a same size, but after some time, some stocks go up, some stocks go down. So some stocks now become more than 5% of the portfolio, and some stocks become less than 5%. And what I do is rebalancing. So if a stock went up, I sell some of it to get it back down to 5%. And with that money, I buy other stocks which went down to get them up to 5%. This simple strategy, it's fucking phenomenal. I mean, what do you essentially do with this? You are systematically buying stocks when they go down, buy low, and then automatically selling them when they go up. Buy low, sell high. But without having to predict what will happen, right? Millions of people try to trade stocks. Oh, I will buy now. I guess it's going to go up. And they're like 50% right. So it is possible to make money trading short term, but it's fucking brutally hard. With rebalancing, it's almost guaranteed that it's gonna work, right? So obviously, like, the worst case scenario is it goes down, you buy, and then it keeps going down. Well, you buy more, and so and so. But I digress. My tweets. Let's look at them. So on Monday, I said, what a bloodbath are the markets today. Like, huge drops. And I bought some more JD at $42.84. Then, next day, on today's menu, Alibaba. Bought more at 74.37. Buy the dip, sell the spike. It ain't rocket science. The next day, I was like, well, that was quick. I sold JD, that small position that I bought, 2 days later for a 41% profit. Now, this doesn't always happen, obviously, but apparently it can. Okay, next. Next day I was like, or was it? Yes, next day. I'm like, I don't always make 9% a day, but when I do, nice. And I said, me 2 days ago, on today's menu, Alibaba bought more at 74.37. Me today, trimmed my Alibaba position with a profit of 34%. Not bad. So see, where most people are scared of volatility or trying to look at tricks to lower volatility, I lean into it. I profit from volatility. The more volatility there is, up or down, the more money I make. So in a very, very small way, I bring balance to the markets, right? So when stocks drop, I buy. So in a very, very small part, I push up the price. And when stocks go up a lot, I sell. So in a very, very small amount, I push down the price, right? If a lot of people did this, the markets wouldn't be as volatile. I'm just saying. And lastly, yesterday, posted a screenshot from the eToro app saying I just closed the trade at a profit of 25.38% in just 8 days in C Limited stock, right? So those were the tweets for the week. If you want, follow me at Hutton_Richard. And see you next time.